Matt Orton, Head of Advisory Solutions and Market Strategy, joining us this morning. Matt, very good morning to you. I mean, let's start by just getting your take on the AI job cuts that Jack Dorsey's company has talked about. Is this just the start of what we're going to see above the board? Because this is one founder who's come out and very clearly said that I've cut jobs because of using AI tools. Other companies may be doing it, but they couch it in various other reasons. He is upfront about it.
Yeah, good morning, Tamana. And it's interesting because I think him coming out and saying this after there was a piece that was circulating across the US on, I think it was Tuesday, that helped take down the market that day, where there was a futuristic scenario of massive job losses due to artificial intelligence. And so I think it was very convenient to make this sort of announcement after the market had already had time to digest and think about what that might mean. I wouldn't extrapolate from what you're seeing with respect to Block to the wider market. And I also wouldn't extrapolate that even further to say it's going to lead to significant job losses across the US economy. I would call it workforce optimization, which has been happening for a while along the margin. I think Block is just a more extreme example, and this is also a company that has been struggling as well. And I think it makes sense to make that sort of decision, especially in a very light asset, more tech-heavy industry where AI can do a lot of the programming work that people were doing. But to your point, you made the note that jobless claims in the US remain fairly consistent. You're not seeing continuing claims, which are the number of people sitting on the sidelines, increase materially. And so those are all good signals about the underlying health of the US economy. And that's why I'm still able to look through some of these changes we're starting to see take place and say, okay, we knew this was going to come, but it's not disrupting the overall jobs narrative, which then fuels consumption, which is critical to the overall economy. So I'm still optimistic on the economy and not so much on the fact that AI is going to kill jobs in a big number in the near future.
Okay, all right. A lot of people take heart from that. Matt, good evening, where you're at. The question that I have for you has to do with the murmurs that you might have heard over the course of the last couple of months about selling America, and that seems to not have taken place. In fact, it's contrary to what some people would have thought, because if you look at earnings, they've been robust. In fact, one might argue better than expected in several cases. Jobless claims and jobs in general are pretty steady. So things are looking good. So what does that mean for flows out of the US, perhaps out of developed markets into India?
This is such a great question. And so I'm actually in Nashville traveling, meeting with clients. And this question has come up time and time again as people think about rebalancing overall portfolios. And what I'm observing happening, especially with respect to a lot of our investors, is it's the marginal dollars going to work that might not be going to the US. So you're not seeing investors selling the US, you're seeing marginal dollars being put to work in areas where there might be more optimism around valuations, where investors are thinking about how do I get exposure to perhaps more value within my portfolio. So call it financials, call it energy, materials. And so they're looking to places like Europe, they're looking to places like Japan where there's fiscal support. You can capture some of the AI trade through Korea and Taiwan. And then you look at the EM complex specifically, which has largely been driven by those AI names. And then you have a country like India that underperformed the EM complex last year. It's been underperforming the broader complex this year. And so investors are thinking a lot more carefully about how they can bring down correlation and increase the risk reward potential for their portfolios. And there's a much bigger openness to having discussions around India in particular, because you can push out your efficient frontier as a foreign investor. And the fact that the Indian markets haven't broken down, they haven't broken out yet either, I think is encouraging. And I've been encouraging investors to really think about having an allocation, one, to help bring down correlations in your portfolio, and two, to have a market that I think, based on better earnings growth, strong economic growth, can really perhaps outperform, especially if there's weakness or stalling of the AI trade in the Koreas, Taiwans that have powered emerging markets so far.
Interesting take, Matt, and leads in perfectly to what my next question was to you. That if India is looking like an attractive alternative, and we've not yet seen that kind of interest coming in, where would you see that opportunity? Because we have now enough data from the Q3 earnings. What are you spotting right now? What are you excited about in the Indian equity space?
So I think one area that's getting more and more interesting is the defense space. So coming from the budget, defense was looking more interesting. You just saw Modi and Israel striking a deal with the Israelis. I think it's the first time in 9 years he's been over to Israel, and it just signals the importance of defense. Not only to India, but the rest of the world. There's significant investments being made. So you look at companies like Hindustan Aeronautics, which have underperformed, but over the longer term, there needs to be upgrades to aerospace, to helicopters, to jet fighters, which Hindustan basically has a monopoly on in the country of India. And parts can then be sold to other nations that are part of the supply chain. So that's interesting. You also have Bharat Electronics that's been a much better performer, but has strong tailwinds and had really, really good earnings. So the defense complex to me looks interesting and has a little bit of momentum behind it. And if you want to lean into the consumer trade within India, I still think there's legs to the idea that you have a burgeoning middle class with more people wanting to travel. A name like GMR is something I've been looking at a lot more closely because they have exposure to airports, to duty free, to the real estate around the airports. And so there's a lot of diversified streams of income. And again, earnings looking very, very good and strong commentary for management. And then, another favorite on the more infrastructure type side, hard investments, more trade happening is Adani Ports. This has been a name I've really been leaning into just because of their ability to capture the full spectrum of all of their customers from start to port. And so they're really making strides. And I met with their management team a few weeks ago and left even more confident with their ability to execute. And again, very strong earnings. So there's definitely opportunities across Indian equities for the more selective investor.
Answer. Thanks so much, Matt, as always, for taking the time, and wish you a happy Friday and a pleasant weekend ahead.
Thank you. You too.